Which one of the following is not a characteristic of an open-end fund? It stands ready to redeem the shares at the closing value on any trading day. The liquidity is determined in the open market, and the share price of an open-end fund will always be equal to the net asset values. Now, an open-end investment company or the open-end fund stands to redeem the shares at the closing value on any trading day. So this option is correct, that the open-ended funds stands to redeem the shares at the closing value on any trading day, whereas the closed-end funds are traded in the secondary market through organized exchanges. So the closed-end funds are traded in the secondary market, whereas open-end funds, they are not traded in the secondary market. Thus, the liquidity of an open-end fund is provided by the investment company that manages it. So, in this case, the liquidity is provided by the investment company that manages it. However, in case of closed-end funds, since they are traded in the secondary market, the liquidity of a closed-end funds is determined in the open market. So liquidity is determined in the open market since they are traded in the secondary market, whereas open-end funds are managed by the individual companies, and hence the liquidity is determined by the investment company that is managing the open-end fund. And the share price of an open-end fund will always be equal to the net asset value. The net asset value is equal to the value of assets minus values of liability per share. So the share price of an open-end fund will always be equal to the net asset values, whereas in case of closed-end funds, it can sell at a premium or a discount to its net asset values. And the managers of an open-end fund may charge a fee or load to the investors upon purchase, a front-end load, or at the redemption. So in case of open-end funds, we have terms like load, like front-end load, which is the fees that is charged at the issuance of the open-end fund, and the back-end load, which is the fees that is charged upon redemption. Now all funds, regardless of whether they are load or no load funds, will charge an ongoing management fees on an annual basis. So apart from this front end load and back end load, it also consists of management fees. So in case of an open-end fund, the shares are ready to be redeemed at the closing value of the trading day, and hence the share price of an open-end fund will always be equal to the net asset value, that is the value of the current asset, the value of the total assets minus the values of the liability per share, and its liquidity is determined by the investment company which manages it. Its liquidity is not determined in the open market. This is the characteristic of a closed-end fund, because it is traded in the secondary market. So the correct option is option B, because it is not a characteristic of an open-end fund, rather it is a characteristic of a closed-end fund.